Hello everyone. Today's topic for the demo session that we've selected is internal audit governance and risk management. In this presentation, we will broadly be covering the elements that includes the definition of internal audit, what are the activities that the internal audit can undertake, what are the activities they should not be undertaking, and how can the internal audit provide its assurance and consulting activity engagements to add and improve organization's performance with respect to the corporate governance and the risk management. So when it comes to the corporate governance and the risk management, we will be discussing in detail the structure of corporate governance and the elements that are available to manage risk in the organization. To introduce myself, I am Talha Tariq. I am an FCCA member. I've been working in the field of auditing and finance for the past 9 years. Was associated with PwC Karachi office, EY Abu Dhabi office. Have been providing trainings to different entities on different subjects, including ethics, the technological advancement that is happening in the current world in the 21st century, on internal audit, on corporate governance, and so on and so forth. Now, to begin initially, we need to understand what exactly the internal audit function is all about. The basic definition of the internal audit speaks on the fact that internal auditing is an independent, objective, assurance, and consulting activity. Now, this means that there are two possible activities in the internal audit department. One would be the assurance activity, and the second one is the consulting activity, or assurance services and the consulting services. The IAA issued the standards and they speak on the definition of the assurance services, and it says that it is an objective examination of evidence to provide an independent assessment on governance, risk management, control process for the organization. Now, what are the examples that may include in this? Would concentrate upon the financial performance of the organization with respect to controls and the risk associated with the functions. It can also include system security and due diligence of the organization or its departments. With respect to the consulting services, the standards speak that it may be an agreed upon procedure with the client, and they may concentrate on counseling, advice, facilitation, and training programs. So broadly speaking, two activities that are possible for the internal audit function: assurance and consulting. Why? In order to add value and improve the organization operations. So any activity that the internal audit department undertakes and is not adding any value to the organization or improving the organization's performance would definitely raise a question for the chief audit executive to evaluate whether this activity needs to be performed in future or not. Moving on, it helps the organization to accomplish its objective through a systemized, disciplined approach. That systemized, disciplined approach would definitely be the concentration on the audit plan, in which there would be periodic updates on the risk that is faced by the organization, periodic reporting on the internal audit findings to the management and the board of directors. Now, what exactly that systematic or disciplined approach will be doing is to evaluate and improve the effectiveness of risk assessment, of controls, and of the governance process. So broadly, there are three elements on which the internal audit department will be working upon: risk assessment, that we will be discussing in our video number 3, the control process that is integrated with the risk assessment and the governance process, and the third one is governance process, which will be concentrating upon which we will be concentrating upon in our third video. However, to give you the broad understanding of the governance process, in layman's term, governance means corporate governance means a system through which companies are operated and controlled, directed and controlled. So the OECD principles gives a detailed definition of the corporate governance. It says it's a set of relationship between companies' management, companies' board, stakeholders and shareholders. So it's an integrated relationship. The governance is an integrated relationship between the stakeholders. The corporate governance also provides structure through which objectives of the company are set, and the means of attaining those objectives and monitoring performance are determined. So monitoring performance, objective setting, integrated affair within the organization. It's a framework, or it's a guidance on how the company should be directed and controlled. And the IIA standards speaks that the combination of processes and structures implemented by the board to inform, direct, manage, and monitor the activities of the organizations towards achievement of its objectives. So everything that becomes to the ownership of the organization is with the board and the senior management. However, the evaluation of those processes, evaluation of the controls that are placed in by the management is done by the internal audit function. As you can see on the slide, we have the definition for risk management and control that we will be touching upon at the later time of the presentation. Now, moving on, where exactly is the internal audit function placed on the organogram of an organization? Now, to understand the organogram, we do know that there will be a board of directors and subcommittees of the board of directors, including the audit committee. And then there will be a CEO, Chief Executive Officer, who will be managing the operations of the company and providing feedback to the board of directors and reporting directly to the board of directors. And all other departments will be giving in the administrative and functional responsibility and reporting to the CEO himself. Now, when it comes to the internal audit department, the internal audit department's reporting are divided into two aspects. One will be the administrative reporting, the other one will be the functional reporting. The functional reporting will definitely be to the audit committee, and the head of the audit committee would be one of the directors from the board of directors. So it would mean that the chief audit executive will be reporting to the audit committee and the board of directors based on the functions and the improvements that they're suggesting. However, the administrative reporting of the internal audit department will be to the chief executive officer, since the CEO is managing all the operations of the organization. Now, we have a few standards that speak on the reporting the quality assurance and improvement program, that is standard number 1320, the communication and approval standard number 2020, and standard 2060 that speaks on reporting to senior management in the board. All these standards concentrate on one thing, that the internal audit department will be reporting to the senior management in the board of directors. Moving on from here, we have the organizational independence standard number 1110 that provides a detailed list of the functional reporting activities that are to be reported to the senior management and the audit committee and the board of directors. Now, that means that the internal audit charter, the approval of the internal audit charter, the approval of the risk-based audit plan, the approval of the remuneration of the chief audit executive, the availability of resources with the internal audit department, all these subjects are subject to the approval of the audit committee and the board of directors. The nature of the work of internal audit department will definitely be undertaken in order to evaluate and contribute to the improvement of the organization's governance, risk management, and control processes through a systemized and disciplined approach that we already discussed in the first slide when we were discussing the definition of the internal audit. The planning needs to be undertaken, standard number 2010, that speaks of the risk-based audit assessment plan, and the risk needs to be identified by the board or the senior management, which the internal auditor will assess and provide a feedback on whether any improvements are required or any new risk that is identified by the internal audit department needs to be added to the audit program or not. Now, the very basic thing that we know of is the internal audit fan. The internal audit fan speaks majorly on three things. One, the legitimate roles that the internal auditor or the internal audit department should be undertaking. The second one is the compulsory roles that they should be doing. And third, which is I believe to be the most important part, that we should be knowing as auditors that what are the activities we should not be performing at all. Now, when it comes to not performing, this means that if we perform any of those activities, this would this would lead to a conflict of interest of the internal audit objective and the organization's objective. This would also lead to the issues of integrity, objectivity, and professional behavior from the audit side. So what really makes a difference is that there are some things that internal audit function should not be undertaking, as that would lead to a direct conflict of interest. For example, setting the risk appetite of the organization. Setting up a risk appetite is the responsibility of the board or the senior management, and therefore that function should not be undertaken by the audit department. Second is imposing the risk management process in the organization. That is a task that needs to be undertaken by the board of directors, and the ownership should flow from department to department rather than just imposing the findings of the internal audit department. Moving on, we have the assurance by management on controls and risks. This assurance needs to be there by the management and not by the internal auditor. We have taking decisions on risk responses, managing risk on management's behalf, and last we have the accountability for the risk and controls. So these are the major points that we always need to remember with respect to the things that the internal auditor should not be doing. Now, moving on to the second presentation, or the second part of the video, we will be concentrating on the governance and how does the internal audit function, reports, and improves the governance of an organization. Thank you.